Good morning, everybody. It is Wednesday, March 2nd, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just to quickly review yesterday, let's see, I'll just bring up the 10-minute chart here, and we'll take a look. Remember that we said if we end up dropping below the low that we made just about an hour or two before the open, that was opening us up to our targets to the downside. And if it could go ahead and chug higher there and get through that high, we had some targets up above. Our first expected pocket of support was down to, if you guys remember yesterday, 42.85 to 42.90. So let me highlight that here on the 10-minute. We had 85 to 90 as our first pocket of support. And where did the market bounce from? 87.50 or 87.75, so right into our first pocket of support. Again, I said if we can break down through I believe it was 43.18, which was near the low of the overnight session, our first target was going to be to 85 to 90. The market came right to 87.50, right in between that zone, and we got just about a 40-point bounce right up to our expected resistance zone here, up around, I believe that swing low was around 2250, and we had the eye level at 2450. So our first target to the upside was 2250 to 2450, and the market came up to 2350, right in between, right in the zone, and fell from there. And then we went ahead and went through that first pocket we expected to hold, and then made a slightly lower low there. So pretty much called the market almost to the tick once again. Um, and that's pretty much it. We found some support right off our eye level. So we have an eye level down here at 75.75. The low of the day was 75 even. So we broke our eye level by 3 ticks, bounced out, came up and basically held that eye level going into the Globex session. And as you can see, we could not get through 2450. In fact, came up a second time, just breached through it very slightly, less than a point, I think, or just around a point, and then sold off. In the overnight session here, as you see, we're trying to come back up. We pulled back. We held this high level almost to the tick, came up, found resistance right off 43.50 eye level, and came down. Now holding this eye level and our power level at 43.10. So that's where we are right now. Let's go ahead and do what we do every morning. I'm going to dial up to the high time frames, and then we'll start coming down and looking for some zones to trade in this morning. So just going through everything, our quarterly or 3-month chart. We already covered that. Nothing's really changed over there. Our monthly, again, we're down below 50% of the previous month now. So all of February, or all of February's price action, we're now still about 10, 20, 30 points below 50% of that candle. So, still looking not good for the bulls. And then we said, remember, the weekly was kind of our first time frame that's giving us a bullish clue. And let's take a look. We tried to go ahead and break out above the previous weekly high, which was kind of a little clue that maybe we would start to get that turn. But as of right now, it's not looking too good, right? And notice 50% of the previous week, 42, 46, 50, yeah, we're actually holding above that, right? So a little bit of a mixed situation here on the weekly. We'll have to come back and see how that looks at the end of the week. And down on our daily here, again, remember we had our bullish divergence back on the 24th. They tried to push, and I just want to again emphasize, where did we find resistance on this push from 41.0175? Just about a tick or two in front of the 61.8 retracement of the leg. So again, we held 61.8 of the first leg down from the all-time high to this low at 42.1275, held the 61.8%, sold off. And on this new leg that we sold off from, we're holding the 61.8 once again. So just kind of interesting to note that. Outside of that, on the daily here, it's looking pretty rangy, right? We're just kind of playing around within all the price action, basically from back on the 25th of February. So the range of February 25th is essentially what we've been trading in for 2 straight days now. And on the third day here, Here on Wednesday, still not quite anywhere near the extremes of that range to break out. So looking really rangy and tight in here on the daily. And like I said, there's not necessarily a strong bearish signal from the highs up here around the 61.8 retracement. But it could still start the pullback here because we are holding that critical area of the retracement. Just keep in mind from this larger perspective, if we do end up pushing and getting through the highs of the last few days, there are two swing lows that I'm watching here, and we'll see them on our shorter time frames as well. That 2275 swing low that we've been watching for a while. If you remember to some of our other pre-markets, we usually highlight somewhere around 4410 to 442275, that swing low there. That is a little section I do expect some type of trouble for the bulls if they start pushing. And if it gets through there, there's this other major swing low here. I know we've already had price action that's kind of cut through it, but I've watched this stuff, and this, for whatever reason, they'll come up and find resistance right there, right around 44.3850. So I'm watching that level as well if they do chug higher. But that's basically it here on the daily chart. If we zoom out, if we draw a fib across the whole sell-off from the all-time high all the way down to the low we made just a few days ago at 0175, and we look at the retracement for that, we're sitting right around that 38% right now. But there's no nice strong alignment. Like, we're not hitting it to the tick or within a point or two there. So we're just breaching through the 38% retracement of this whole sell-off right now. So just keep that in mind for whatever that's worth. And I think that's pretty much it. So let's go down into our intraday time frames now and see what we can start working with here. Real quick, I just want to point out, where was I? Give me one moment here. I thought I had something prepared. Oh, okay, yeah. So it's down on the 60. Yeah, it's down on the 60. Let's look at this on the 4 hour. Remember we came up, and I've said this a million times, so hopefully you do remember. We came up to that 45.86 area and failed, and then came and tried to get through again at 85 and failed. That leg from the failure, that double top down again to 0175 here, look at what the high of yesterday was. So we came up, I guess it was more so in the overnight session because we basically started selling off in going into the open there. But in the overnight session, what was the high? And again, that's our yesterday's high, 43.99. And the 61.8 retracement from that double top failure down to the low we made at 0175 is 4400, 4475. So the fact that the market turned there, the fact that there was a nice bearish divergence, that was a nice clue. And remember, we said when we came into the market yesterday, our 4 hour and our 60-minute had a bearish signal from that high. So that was a clear enough signal that we could get some follow through if the bears were gonna go with it, and we actually did get that nice sell off there. So again, just interesting to note that 61.8 rejection. So looking at where we are right now, it's very tight in here. It's really hard to say. I mean, we're holding right around the 38% retracement of the new leg now. So from 0175 up to the high we made again, 43.99, right into that 61.8. We're retracing that leg now, and remember that 38% retracement is where we got 42.85 from yesterday. So 42.85 up to 90, which was some type of thing in the price action there that we had, was our expected support. So they came down, they did hold the 38 at 87. They came up for just around 40 points and pulled back, and we're still playing around right between the 38 and the 50% retracement right now. So what can we say here? We've got a nice clear bearish signal from 43.99 from yesterday's high. We have it also, remember, on the 60-minute. We said we saw it there as well when we did our pre-market yesterday. And then as the market pulled back, we said there's actually a bullish divergence off the low. and it happened to have been somewhere just before the open yesterday, but it ended up not holding, and we broke low. And remember, our dividing line was the swing low right around 43.18. I think it might have been 18 or 19. It was basically 50% of the day before that, so I believe it was right around 43.18. If we broke through there, where we were seeing the potential bullish signal, then we were going to want to be sellers. So it broke through, continued to sell off, but when we found support down here, we actually got a new, really nice, clear bullish divergence on the 4-hour. We also have it on the 60-minute as well from that low. So what I'm saying here is, just like yesterday, we had two conditions. If we could get through the previous daily high, where we had a confluence of bearish signals, that was opening us up for a bullish push up into our next expected areas of resistance. So this morning, if we can get up through 50% of the previous day here and get up through that high, that's opening us up into our targets up to the upside. And there's that 2275 that I mentioned just a few minutes ago. And that's going to be that next area of resistance. So just like, you son of a bitch, just like yesterday when we, or the day before yesterday when we said we were gonna, if we get through the highs, we have 4498 to 4400 as our resistance zone. This is the next one up above here, and I know it's close, but remember, and this is, again, I really am proud of these calls we're making. A few days ago, we said if we get through the high of the day before, which was that 4382, 8384 area, our first expected resistance was 98 to 4400, and the high there was 4399. So literally right in between the zone we expected to hold is where the market did hold and pull back from. So if we get through 4400 now, we're now going to come up into that 44.2275 swing low. And I think we had a little bit of a range because there's some eye levels lining up in that area. So that's what we're looking at above. If they get through, that would be the first target up to about 44.22. And then a little bit further, we're now going to come back up into basically this little region right up in here. So right around, I would say 44.35. And then this whole section right here is going to be trouble. So I'd be taking profit probably right in front of that swing low there at 38.50, so maybe around 35 to 37. And then if they start to really chug through there, we've got the bigger targets, and the 61.8 brings us right to that major failure area. So that would be that bigger target to the upside. And that's what I kind of see here on the upside. So if the market gets through this overnight high, which is just about 50% of yesterday, then it opens us up for a push to the high from yesterday. And then if they can get through, if the bulls can get through, again, there's that level, and then this next level around 38, and just above 38, it's going to get messy. So that's why I want to take profit in front of there, because who knows what's going to happen in this little zone up in here between the 27 extension and that swing low at 38. So it's a wide range, but it's hard to really call anything in there. On the flip side of things, and what I'm going to do here is go down to the 60-minute. We're going to want to look at what we have below us here, because remember, our conditions this morning are that if the market holds above here, above the low of the overnight session where we have a confluence of bullish signals, and it can get through 50% of yesterday, we're looking for up to the high of yesterday and beyond. If it can't do that and the market starts to pull back and we get through the overnight low, we're now breaking through that confluence of bullish signals, so it opens us up for targets below. So let's go ahead and take a look at what we have below the overnight low. So right now you can see we're failing right at the 50% retracement level. There's also, I'm not in love with what the analyst has just identified. I don't think that doesn't fit my visual criteria for divergence. So I'm going to hold off on that. But what I'm seeing here is we just got a little 60-minute bullish signal off of our proprietary power level there at 43.10. So I'm just kind of watching that right now. But if we do come down and this doesn't hold, this potential bullish signal here, we're going to come down and test this low. If this breaks, we're going to want to pay attention to what's below us here. So the 38% retracement of the whole leg's basically done with. We came down, hit it to almost to the tick and got a 40-point bounce, and now we're playing below it. So we need to look at what we have here. 62 is a good target if we find a short up in this area. Let's say something starts to present itself and the market starts to pull back from here. That 62 is going to be my first target. If they don't hold 62, the next area is going to be, again, that 50% retracement area. And what I'm going to do here is I'm going to start marking these levels and then copying them over to my short time frames. And we'll see if there are any prediction points or other minor levels over here that overlap. So we've got that at the 50. Our 60, everything below us basically hasn't changed for the last 2 or 3 days of our pre-market analysis because the market hasn't come back into these levels to try them yet. So we've got, again, 42.15 down to about 42.12, give or take a few ticks. And then if that breaks, remember this major swing high here, which I actually would like to mark here with my dotted line here. Let me just get the number, 41.97. So 97, there's the pocket there. Our eye level is 89. That swing high is 97. Like I said, very well could come right to one of these levels and just bounce right off of that high to the tick. So we want to be aware of that level, but there's a little pocket here right into that major eye level. So we've got that, and that's same as yesterday. And then basically it's the same situation, just a little bit further down. And I know that this stuff is a little bit of a range. It's pretty wide here, just about 10 points or a little over, but it is what it is. So we've got that major high again, could act as some type of support right off of it. But if they do chug through there, down 51.50 is going to be that critical level to hold. If the market cannot hold above this pocket right here, there's really not much else down. I mean, there's going to be some minor levels in here. There might be some prediction points. There might be some minor eye levels, maybe some fib at the point when we get down there. But basically, once we get through 51, I'm looking right back to that 0175 low. We've got our 4111, and then it's going to open us up for much lower. So that's what we're looking at this morning. Again, I don't want to ignore this 60-minute bullish signal right now on this pullback. If we look at the pullback here on this leg, we go to our 10-minute chart here, it looks like it's actually a pretty healthy retracement. Whoops. So just a little breach through the 50% level. Notice that our proprietary level today happens to be exactly that 50% level. Kind of peaks below, and we're coming up, and now we're getting a little bit of a bearish clue off 24.50 right now. So holding 50% of this leg is a good thing, but I'm noticing the potential that we could actually get a little rejection in here. So that's where we're at, guys. I think it's pretty straightforward this morning. If we get through, again, that low of the overnight session, we've got our targets below us here, 62 being the first, and then down into this 51 area. If the 51 area does not hold, and I got to go back here to my 60-minute chart. So we have that little pocket from whatever, plus or minus a few from 42.50. And if 42.50 breaks, of course 42.40 is there, but like I said, we're down into this 13 area, give or take. So let me highlight this stuff, get it in here. So there's that 42.50 pocket Remember, plus or minus a tick or two, a point or two there, around 42.50. There's 62. There's our little pocket right around 42.13. In fact, I think it's more so, I think it's a little tighter than that, but we want to be aware of that first eye level. So we've got that. And then I'm just looking back to my higher time frame to see what else I missed here. Let me copy over that level there. So there's that swing low, and we mentioned right here. Let me bring this over. Remember 89 to 97, there was that one pocket. And then we're all the way down. There's that major swing high there at 63. And remember I said it's a little bit more than 10 points here, but it is what it is. We've got that right there. So just want to make sure I've got everything that I just drew on my 60-minute over here on the 10-minute chart. So I think that's basically it. We've got everything mapped out here. And again, if we're going to go with whatever the market does, coming into the open. So we're going to get down to the short time frames here with our members. Have a great day to anyone watching out on the internet.